Okay, the first question, are we in a bear market trap? I think the market made a significant peak just the other week at about the 950 level in the S&P 500. We should get a nice pullback during the summer. Then I expect we're going to rally back up to the highs, and we'll have to see from there. But as far as the rally, I think the rally that we saw since March is pretty much over with. The next move is down. Is it more beneficial to buy lower price stocks, meaning more shares, or are you better off in better quality stocks but fewer numbers of shares? Well, faced between a choice of more shares or better quality, go for the better quality. A lot of people get mesmerized thinking that it'd be neat to buy, tens of thousands of shares in some penny stock or something, and that's how you lose lots of money. Generally, stocks are priced low for a reason. Something's wrong with the company, or this stock is just pretty crappy, and you don't want to mess around in situations like that. However, there are times when low-priced stocks does equal quality. That's after you're going through a long basing process, a new bull market's about to start, or a new major uptrend in stock is about to start, and that's really the best time to buy. How do you place orders on Forex? I have no idea. I don't trade Forex. How can I consistently make 15% to 25% annually without risking blowing up my account trading full time? Well, I believe the best way to do that is invest in bull markets in the top stocks in the top sectors. And whenever you enter a position, have a plan of when you're going to get out so you cut your losses. You do that, you should be able to consistently make that target, unless you have a year like you had last year where you're in a major bear market and it's not quite clear whether that bear market's even over yet. Question continues, overall return to my entire portfolio. What percentage should be in fixed income, stock plays, option plays, etc.? I'm a full-time trader. I have no idea, because the answer to that question has to do with your own situation, how old you are, how much money you have, and so forth. And generally speaking, you really want to do the higher risk stuff, a lower percentage of your portfolio. That might be options for you, could be speculative stocks or whatever. Where is the market heading in short term? I believe down. I believe we made a major top the other week, although we're probably going to churn around and chop around before we start really moving down. What do you think about MA? I suppose you mean moving averages. I use them all the time, talk about them all the time, so I don't know exactly what you want to know. The charts seem to indicate we could move up. Last week or so, market began retracing, except Friday where we bounced back up. Yeah, we had a big pullback off 950 on the S&P 500, then a counter trend bounce off 900, which kind of picked up steam Friday, and I expect we're going to chop around between 930 or so and 900, and then get another continuation, what I think is a correction. Oil and negative divergence. What's the negative divergence you're talking about? You're talking about the oil stocks and the price of oil. I'm not quite sure what you're talking about. What stock to buy now to make a short-term profit? Generally speaking, there aren't any stocks I think you should buy right now. I think you should be very cautious in the market. We've had a tremendous rally in the market since March, and we're due for a pullback. So I don't think you should be jumping in stocks at this moment. As a stock trader, how important is to understand the Forex market and the bond markets related to my stock trading? Normally isn't very important at all. You don't need to worry about that. You can't look at everything, expect to know everything, and try to factor every single little thing in your decision making. If you have time, do you think you see a deep correction before the end of 2009? I think we're seeing start of a correction right now, and I think that correction is probably going to give up half the gains we've seen since March, and then we're going to have to go and see what happens on the strength of the next rally before we figure out whether another big correction is going to happen or not. Some people enter trade by looking at 5-minute, 15-minute, 30 minutes. I'm not sure, but some traders enter trade when all three time frame indicators are doing the same thing. You talk about this. Yeah, I generally look at 2 time frames, the daily chart and then the 60-minute chart. I really don't think you need to go beyond that and look at multiple time frames. However, if you're looking at a 5-minute time frame, then you're really turning yourself into a day trader. If you want to be a long-term investor, I look at the weekly time frame, then the daily time frames. You want to be someone holding for days or weeks or months. When things line up great, then I'd use the daily time frame, the 60-minute time frame. Do you favor the position that we'll see Dow 5,000 through 6,000 this year? If so, what positions will you be to take advantage of it? I'm not sure if we're going to see the market fall that low. I do think we're going to get a nice correction right now in the middle of the summer, then a way back up in the fall. And if we find out the market makes a double top, then yeah, we can easily see the Dow fall to 5,000 or 6,000 by the end of this year, or sometime in the first half of next year. How would I take advantage of that? Hopefully I'd be shorting on the way down if we make a double top. If that happens, then I'll be looking to go long in the top performing sectors of the market, holding up the best, and the stocks that make up those sectors. And that's actually something I'll be looking to do over the course of summer if the market corrects as much as I think it will. How much the market corrects from the current level? I believe we're going to see the market give up about half the gains it's made since March and the recent high. What's your opinion about financial stocks in the near future, 2-3 months? I think they're garbage. There's no reason you should be buying financial stocks. These are garbage companies. It's no reason to hold them for the long term. And the market does start a new big bull market, or we have another big leg of this rally. I expect we're going to see other sectors and other stocks lead the market rally. So there's no reason to get into financial stocks. In fact, they're lagging right now. The stocks are crap. They're run by idiots who drove these companies into the ground by chasing after performance. You don't want to invest in garbage like that. Or should we invest knowing that the debt in this country is so great that we cannot repay the interest, let alone the principal? How do we save any savings or investments we have to face this huge amount of debt this country owes? Well, that's been a problem for 30 years now, and it hasn't been the end of the dollar. So it hasn't been a huge danger yet, but one day it will be. When will that be? No one knows for sure. We just have to look for the warning signs, which is a continuation of the dollar declining in value and huge inflation. We don't have huge inflation in this country yet, but it could happen down the road. My advice is to look and use prudent investing methods to pick the best stocks that are going to go up the most, and use a worldwide global viewpoint to do that. And if you do that, you're going to find that what's poised to go up the most now, once the market really gets going and the recovery really picks up, isn't necessarily the United States, and not necessarily commodities or gold either, but it's foreign countries that are poised to grow the most over the next 20, 30 years. And I'm talking about China, Brazil, Russia, and India in particular. And if you were to invest in those countries, which is one of the things I plan on doing, at least putting a portion of my investments there, then you don't have to worry about this problem that you're addressing. What signs would you look for to short this market, presuming a current bear market rally? Well, I'm actually, at the moment, do have a small short position in the market, so I'm already short. Sector stocks which are going up or down, general trend of the market. Already talked about that. What are the best indicators to show a change in the trend? When is it safe to go with this trend? The ultimate indicator is price. When a stock or a market is making higher highs and higher lows, that's an uptrend. Opposite is lower highs and lower lows, that's a downtrend. Watch for that pattern and go with that pattern, stick with that pattern until it changes. Indicators can be used to help you make entry points within that pattern, but indicators themselves won't make you money. And I know the new investors who get in the stock market and start trying to educate themselves, they get caught up often trying to figure out what are the perfect indicators that they can follow that's going to make them money, and it doesn't work that way. Should a stock be bought before earnings date? Generally, you shouldn't worry about such things. You shouldn't worry about news. You should buy stocks and companies that are poised to go higher and not react to short-term news. What is the most important indicator to identifying a trend? Again, it's price action, which I just explained. If you could use one indicator for buying or selling, what would it be? Again, it would be price action. I'd be looking to buy stocks that change the pattern of making lower lows and lower highs and now start making higher highs and higher lows, and buy then and look for the change in price trend, and then get out when that pattern changes. Which software program provides the best snapshot of industry sectors moving up or down? TC2000, that's what I use. In fact, I did a video last week showing you that program in action. Go to Warden Brothers to look it up. I think it's warden.com, or just type TC2000 in Google. Or if you want to be helpful to me, go to my website and you'll see a graphic for TC2000 in the lower right hand corner, and if you click there and buy through that link, I'll actually get a very tiny commission. It's not very much, like $5 a sale. It's not, so I don't really care if you do it or not. But either way, check it out. When will the market really get turned around, or when will the extreme bottoms be over? I believe we just made a significant top here at 950 in the S&P 500, and I think the top's going to hold the market down for quite some time. And when at some point the market breaks above that top later this year or next year, that's when I think the market's really going to turn around, and you're going to really see a bull market pick up steam. This rally that we had in March stop pausing and really take off again. Until that happens, though, we face the danger of more bear market declines. If the American dollar doesn't crash, it's still worthwhile buying junior gold stocks. Yeah, I mean, it can be when the junior gold stocks are poised to go up. Right now, the gold stocks, they've had this huge rise since November, and I don't think the second is a good time to buy them, maybe in the fall. But don't worry about the dollar too much. We've been in a bull market in gold stocks, a secular bull market since 2002, and that bull market occurred without the dollar just crashing and go to zero. How much effect does option trading have on the long-term trend in commodities prices? Zero. It may affect it for a couple hours or sometimes on a day during options expiration, but it has zero effect on the long term, and you shouldn't even think about or worry about it. Don't worry about things that don't matter. How much? That's the same question. What's the best way to learn how to trade? Where to start? Entry, exits, how to read charts, technical analysis, trends I like to blah, blah, blah. Who to trust? Well, follow the stuff I'm giving you for free, my free email list, and then when the time comes, join my site, take my stock market mastery course. Otherwise, buy the books I mentioned on the site and start reading. Being that I lost tens of thousands of dollars in the past and waking up finding my stock it's tanked overnight, was downgraded, most new shares just huge, blah, blah, blah. Even chapter 11. My last blow up was in August of 2008 when Fannie Mae surged down when appearing to hit a bottom. Based on several technicals, my trust for the market has been shattered. My true question is, how can I feel confident again in any trade when a stock will surge 5% within seconds? I now have this fear of losing. I guess you can tell by my comments I'm a tactical time trader. I find it difficult to stay in a trade and reap the through the risk rewards when, wow, okay. Well, let's just talk about your Fannie Mae trade here, and I think that can address your question. You bought Fannie Mae in August of 2008 when it appeared to hit a bottom, and you bought in guessing the bottom. Fannie Mae at the time was in a vicious long-term downtrend. The stock was below its 150 and 200-day moving average. That moving average is sloping down in a death spiral, along with all the other financial stocks too, and the stock market as a whole. But Fannie Mae was one of the worst-looking charts you could possibly find. It wasn't in a bull market, so you're trying to guess the bottom. And generally speaking, you do not ever want to buy stocks in which the price is below the 150-day and 200-day moving average. That moving average is sloping down, as Fannie Mae was doing at the time. That's how you lose money, is guessing bottoms in vicious bear markets. Don't do that! And I'm not talking to you personally, but everybody. Don't do that. That's how people lost their shirt last year. And if you don't do that, then you can feel confident that you're making the right decision. If you try to trade against such vicious downtrends, there's no way you can feel confident. If you try to keep doing that, you're going to keep feeling uneasy. And I'm kind of being hard on you, but I just got to drill that into you. And Fannie Mae is like a poster boy for this kind of stuff. In fact, last year in July, I was telling people, I don't know if you remember the site at the time, but I was doing videos and telling people that I thought the stock market was going to totally crash in the fall because I expected Fannie Mae and Freddie Mac to go bankrupt. I thought they were going to go bankrupt, and no one should buy them. I was saying this. Obviously, you weren't part of the site then. I wasn't right about everything. I thought gold and gold stocks would go up as a result because the Fed would have to bail them out. That didn't happen. No one's right about everything. That's why you always have to have stop loss orders when you take positions. And if you use your stop loss orders and clearly define where you're going to get out at if you're wrong, then you have nothing to fear. And then if you don't buy stocks in sharp downtrends below their 150 and 200-day moving averages, even if everyone on TV says it's the bottom and you're scared to death that you might miss out, don't worry about missing out. Don't worry about guessing bottoms. Make things a lot easier for yourself. Buy when things are ready to go up on a consistent basis, and that's how you make money in the stock market. Are you worried at all? No, because I'm not trying to guess bottoms and vicious bear markets. I don't care about missing out on big gains either. What I worry about, it's not really worrying, it's work. What I try to do is find stocks and positions when I want to go long that are going to go up on a sustainable basis. And I don't worry about getting in on the exact bottom. I care about getting in a trend that's going to last. I would like to ask about market internals and volume. To ask more about it. What are the best stock market indicators to gauge the market? Well, as the market as a whole, the long-term moving average is important to figure out where you might get some, tops and bottoms. The VIX is good. So are investor sentiment surveys like Investors Intelligence. In a very simple way, how can I support your effort to continue this unique system you've developed? Don't really need help. Got plenty of resources. Take a trial when one's available, I suppose. How can a person with limited investment and knowledge become a day trader? The truth? You want to know the truth about that? You're going to have to educate yourself. You're going to have to read books. If you want to become a day trader, you're going to have to be willing to put money on the line and be willing to lose it to learn, and it can take you months. Generally speaking, the shorter the time frame, the more active and rapidly you're going to trade, the more difficult it's going to be for you. How many best sectors are appearing on the horizon now? What are these sectors? I showed a couple of them last week in a video on the website. Go look at the video. But to mention a couple, construction, cement industry are making stage one bases. But the very best sectors are the international markets, China and Brazil and India. Yeah, I agree with the 50% retracement. Is it okay if you talk about charts? That's what I'm doing. In 1 year will the Dow be? I have no idea. What's your bet on where we're heading in the next 6 months? Generally, I think we get a correction and we see how to increase the probability of winning and making a living day trading. Again, define where you're going to get out. How do you set the price of a stop loss order? To use percentage of the dollar value or low previous price, or you just take a wild guess? I don't use fixed percentages. It doesn't seem to work very well. Instead, I look at the last low and put my stop price in there. How do I know if the market signal starts reverse from bull to bear? Look at the moving averages. Look for a stage one base to form, and then you go into a new bull market. You really believe in technical analysis? Obviously, you do. Why is the market going down for its usual summer pullback? I believe it already started to. If you had you pick, what would you choose? Low float, erratic high flyers, or stocks that you know the world can't live without? Neither. I look for sectors that are performing the best, that are poised to go at the best, and they can be made up of both stocks. Well, I've answered about 46 questions, and I'm going longer than I planned to, and my throat's getting a little sore, so I'm going to wrap this up. And as you can see, some of the questions are starting to repeat themselves. As you see, how's the time to throw chips? When blah blah blah. Anyway, I have more information going out for you in the coming weeks, and we'll be applying some of these lessons and more information, more educational stuff. So stay tuned.